Before we start this video, do like and subscribe to our channel and not miss on any updates.
Good morning everyone once again, and we'll start today with A7 construction contract. Again, highly scoring if you ask me, provided you understand the core concept of the standard, you'll be able to manage that. And then with the remaining time, whatever we have, we will start off with accounting standard 3, that is consolidated financial cash flow statement. And we'll try to complete as much as possible from the cash flow statement. So I'll just share my screen. Now, as far as construction contract is concerned, there is some part of disclosure that you need to remember. Okay. But apart from that, there is only one single logical flow that you need to understand. And this standard is closely related to accounting standard 9. When I say closely related, I say it because this has also got to do with recognition of revenue. How do we recognize? Of course, we will also recognize how much is the cost, and we'll also see how to recognize the profit. When you go to CA final level, you will understand accounting standard 7 plus 9 in a single standard. There will not be any separate standard that you need to refer to. Okay, so after you pass intermediate, you will understand it in a single standard. Now, before I jump into the core part of the standard, what I want you to understand is the logical flow which we need to understand. Okay, how is it different from the regular contracts? Once you understand that flow, the terminologies, the working and all of that, that is super simple. Okay. Now, in case of normal revenue recognition, when there are goods, we say, okay, when the goods, let us say when the title or risk and reward in the goods, when they have been transferred, we recognize revenue. So if I am selling one mobile phone, I give you the mobile phone, I recognize the revenue. There is no problem in that. Then when we come to services, we followed something called as proportionate completion method. That is, how much percentage have I completed? Based on that, I can recognize revenue. Now, when we come to accounting standard 7, this is also a kind of service. This is also a kind of service which is provided. But when we come to accounting standard 7, which deals with construction contract, I am providing some kind of services. You approached me, you asked me, can you construct a building for me? I said, okay, I'll construct a building for you. This is the cost. Sorry, this is the cost, right? But who is procuring the goods? Who is procuring the raw material? I am procuring the raw material. So I will procure the raw material. I will procure the labor related activities, and I will construct a building and I will sell it to you. Okay, so that is what is called as a construction contract. So it is slightly complicated because goods are also involved, services are also involved. Goods are also involved, services are also involved. Like I'm constructing road, or I'm constructing a bridge, or I'm constructing a building, or I might have purchased the land, constructed the building, and then I want to sell it to you. There could be multiple different scenarios, but this is specifically a case where there is a contract of construction. There is a contract of construction, and the key issues which are addressed here is, if it was only services, I would have said proportionate completion method. When there are goods and services, what is to be done? So here also, what we follow percentage contract completion method. We recognize revenue and cost based on the percentage of contract completed, and the profit is also accordingly derived. Now, what is the meaning of percentage completion? It basically means, say for example, somebody came to me, they gave me a contract, and I have quoted a revenue, or I have quoted a price of, let us say, 1,000. Okay, I have quoted a price of 1,000 to you for constructing a particular item. Now, for this 1,000, I have estimated that my estimated costs are, let us say, material 200, labor some 300, overheads some 100. So 300 plus 200, 500 plus 100, 600. So I'll collect 1,000 from you. I will spend 600 to deliver the construction contract or construction services. Now, this 1000 minus 600, that is 400 of profit. This is called outcome of the contract. This is called outcome of the contract. So by executing this contract, I will get a profit of 400. Now the key challenge here is, when should I recognize this 1000 of revenue? When should I recognize this 600 of cost? Should I recognize revenue when the contract is completed? That will not give a true and fair picture because costs have been incurred over a period of time. So what the standard says is, for example, this is a 2-year contract. This is a 2-year contract. In year 1, cost incurred is 400. In year 2, cost incurred is 200. Year 1, cost incurred 400. Year 2, cost incurred 200. Now, we calculate something called as percentage completion. How do we calculate that? Total cost incurred in the current period, cumulative, we'll always do it, cumulative till date, 400 divided by total expected cost, 600. So, percentage completion is cost incurred till date. Cost incurred till date divided by expected total cost. See, we can calculate percentage completion based on outputs also, but as far as your examinations are concerned, mostly the questions will be based on input. Input means cost. Output is the final product. For example, if I am constructing a road, the kilometers built can be considered to be output. Okay. If I am constructing a building, square feet built can be considered as an output. But questions will be generally tested based on cost. So cost incurred 400 divided by 600, the completion becomes 66.67%. And in the second year, let us say we incurred entire 200. 600 is the cost incurred, 600 is what is expected. 100% is the total completion. 100% is the total completion. Now, revenue that we will recognize is 66.67% multiplied by 1000, that is 666.7. Here, by the end of year 2, 100% revenue means 1000. So this is cumulative. This is cumulative. So what do? First we take what is the cost we have incurred till date. Then we take what is the expected total cost. Then we calculate something called as percentage completion. This percentage completion is cumulative. This is cumulative. Okay. So cumulative revenue should be 66.67% of total revenue, 666.7. Here cumulative revenue should be 1000. So how much revenue should be recognized? Revenue for the year will be here 666.7. In the second year, total revenue should be 1000 till the end of year 2. And we have already recognized 666.7 at the end of year 1. So 1000 minus 666.7, what we get is 333.3. Okay, so this is the fundamental concept that you need to understand as far as revenue recognition is concerned. Then, how much should be the cost? Cost is, here we have incurred 400, here we have incurred 200, profit will be 266.7 and 133.3, total profit becomes 400. Do we have any question in this logical flow of concepts? That is, what is expected cost, what is cost incurred, what is percentage completion, and how we calculate revenue, the basics part. Is there any question? Clear? Okay. Right. Now, after having understood this, we will look at few key terms. We will see how things are calculated and then we will start solving the questions. What is a construction contract? A contract which is specifically negotiated for the construction of an asset or a combination of assets closely interrelated or interdependent in terms of the design, technology, function, or their use. Now, what does that mean? Either it is a negotiated contract for construction of a single asset. Single asset means bridge. It could be a road, or a combination of asset. Combination of asset could be, let us say, I want to build a township. Okay, in the township, there are residential apartments, there are commercial apartments, there are amenities which are to be provided, which are interrelated to one another. Okay, or I have given a contract to build a highway. That highway has highway as roads and also bridges and tunnels. Okay, so those are interrelated. So construction of refineries or other complex pieces of land and equipment where there are multiple aspects coming together. So combination of assets closely interrelated or interdependent, that is called a combination. That is also called a construction contract. So one is a single asset. It could be a combination of assets. This is more for your understanding, nothing to do for the examination. Construction contracts also include service contracts directly related to the construction of the asset. For example, services of project managers and architects. So this basically means if I have to build a building, construct a building, then I also need interior designers, I need some project managers. Those related services which are provided are also included as a part of construction contract. Okay. Now, there are two types of contract. One is fixed price contract, second one is cost plus contract. Now, fixed price contract, basically it means that I will give you a fixed rate. I will give you a fixed rate. Means if you construct 5 kilometers of road, per kilometer I will give you so much. That is fixed. It will not change, it will not vary. I will give you 100, I have given you contract to construct 100 kilometers of road. 100 kilometers multiplied by 100 rupees, that is your price. Okay. So a fixed price contract has a fixed sum and a fixed rate per unit. So it could be something like I will give you 10,000 plus rupees 5 per kilometer. This is also fixed because kilometer is fixed. Kilometer doesn't change. This is also fixed. This is also fixed. Then we have cost plus contract. This is where you find sometimes difficulty in exams question. So here you have to be slightly more careful. Cost plus contract, basically what it means is you will incur a specified amount of cost. For example, if I have to construct a road from point A to point B, the government and I will agree that okay, this is the cost I will be incurring, or the government will say this is the estimated cost, or will define some parameters. On that cost, I will add a percentage of cost as profit, and that becomes the contract price. This is called cost plus contract. So for example, if 10,000 is the cost and 20% is the markup, which is 2,000, the total price becomes 12,000. Generally in cost plus contract, you will not incur losses because whatever is the cost incurred, a profit percentage of that is given as allowance, right? Now, these are the two types of contract, fixed price contract and cost plus contract. Now, when you determine the revenue for a fixed price contract, whatever is the price agreed will become your revenue. And whenever you talk about cost plus contract, the total cost plus the percentage markup, that will become your revenue. Okay. Now, there is one more aspect that we need to understand, which is called as variations. Variation means, let us say, first you and I agreed that I will construct a 3-storied building. Okay, this is what you have initially agreed. As we started constructing, you also realize that we can add one more floor or half a floor as maybe, let us say, a terrace clubhouse or something like that. So subsequently, we varied terms of the contract. Varied the terms of the contract means earlier we have initially agreed, initial amount we agreed was for 3 floors. Then one fine day you came up and said, sir, can we have a 4th floor, which is a party house? I said, yes, of course you can have it. But then I will charge extra for that. I will not give it for free. I will not provide that service for free. So that is what is called variations. Okay. So initial fixed amount plus variations will become your contract revenue. Apart from this, there could be incentives. There could be penalties as well. Penalties you will reduce. Now, what is the meaning of incentive? You came and said, sir, if you complete the work within 6 months, then I will give 1% extra as a incentive or bonus. Penalties may also be there. If you delayed beyond 1 year, then 1% penalty is there. So that kind of arrangements can also be there. Now these incentives and penalties, you cannot directly add it to the contract revenue. You have to see whether the revenue is probable and whether we can measure it reliably. For example, I am very sure or I am very certain that by the end of 4th year, 80% of work is completed. 4th month, not 4th year. By the end of 4th month, 80% work is completed, and it is highly probable that I will complete the remaining part in 1 month itself. So I will be entitled to the incentive. Only then I can add it to my revenue. So in revenue, whatever initial amount you have agreed, this you will take it directly. There is no confusion on that. But and variation also, as and when there is variation which has been agreed, that you will include. When it comes to some claims, incentives or penalties also, you will see whether it is probable. Will I complete on time to be entitled to the incentive? And can I measure it reliably? If these two conditions are satisfied, that also gets added to the contract revenue. Okay, so this is the first part. So how do we calculate contract revenue? Initial agreed revenue plus or minus variation in contract work. If I increase, I will add. If I decrease the scope, I will reduce. Incentive payments, if at all, here it has to, you have to check whether it is probable. Price escalation. So price escalation, what happens is sometimes we enter into a contract, let us say construction, it's a long-term contract, and if I am taking the contract, there is a risk that prices of cement, prices of rods, prices of other material, labor, all of that may increase. So to safeguard myself, I can add something called as price escalation, where I say that if the price of cement increases by more than 10%, then so much of amount will be added to the contract price. Okay, so that is escalation. Claims, if I have to claim something, so if I have some claim, if I have incurred some cost and I want to get it reimbursed from you, I want to claim from you as a part of the contract, this also is included. Minus any penalty. Any penalty means if there is a delay in work, beyond 1 year, if it is delayed, 1% penalty. I am already in the 9th month and I know I will not be able to complete within 1 year. This penalty I will reduce from the contract revenue. So this is how we will calculate contract revenue as the first part. Now in an examination question, the three critical aspects actually. One is to determine the contract revenue. Generally straightforward, they will say that this is the contract revenue. Second is contract cost. How much should be the cost that I should incur, that I have incurred and that I will incur, that I need to measure. And then percentage completion. If these three things are in order, you can score out marks in this particular chapter. Okay. Then when it comes to contract cost, there are costs which are directly relatable. Directly relatable means the direct raw material, the direct labor, right? Whatever you understand as direct cost as a part of your costing. So that is included as a part of contract cost. Sometimes what happens is, let us say you sent iron rods worth 10,000 for the contract work. Out of this, only 9,000 worth of rods were used and the remaining is scrap. The remaining is scrap which you sold off for 500. So what you will do, 10,000 minus 500, 9,500 is what you will consider as a part of the cost, assuming the remaining 500 are normal losses. So when you take all the set of rods, everything may not be useful. Some may be bent, some may be damaged, some may be small pieces, right? So to the extent it is normal, you will include it as a part of the cost. Any scrap sale, any incidental revenue that you get from the leftover material, that you will reduce from the cost. That is the first thing. Then any cost which are directly allocable to the contract based on normal levels of construction activity. Now, what is this? For example, there is an insurance at site that you will be able to allocate for the particular site. Now, insurance I may take for 10 sites together because I am not carrying out only one construction activity. I am carrying out 15 different construction activities. For everything I have taken a single insurance contract or single insurance premium I have paid for site insurance. This I should allocate to the construction contract on a reasonable basis based on the normal level of activity. Or there could be cost of design and technical assistance indirectly related to the contract. Maybe some kind of design work has been given to the centralized head office where there are a lot of designers, engineers and all of that. They work on multiple projects together. If that can be allocated, you can allocate. construction overheads and borrowing cost if they can allocate it. Directly related cost, material cost, labor cost, depreciation or cost of hiring plant and equipment, design and technical assistance directly related to the contract. Now, what is the difference between this and this? Here, I have hired an engineer and I have said you'll work only for this project for 3 months. Here, I have hired an engineer, he is working on 3 different projects. So that is the difference, right? Then, any cost specifically chargeable to the customer, meaning to say, I have to, let us say, construct a building. For constructing the building, I need an interior designer. I don't have the interior designer. I agree with the customer that I will get an interior designer. Whatever costs are there, I will charge it to you. So that is a cost which is specifically chargeable to the customer. Now, sometimes what happens is there are materials which are unused. Sent 10,000 worth of materials, 2,000 is still in inventory. In this case, cost for the year is only 8,000. Cost for the year is only 8,000. Cost that cannot be attributed to contract activity or cannot be allocated to a contract should be reduced from the cost or excluded from the cost. For example, general administrative cost for which reimbursement is not specified, selling cost, R&D cost for which reimbursement is not specified, depreciation of idle plant and equipment that is not used at a particular contract. All of these should be excluded. Okay. So any abnormal cost should be excluded because that is our cost. Now, this depreciation of idle plant, think of it. For construction activity, I need a JCB. I have a JCB, but on that JCB is used for 3 months on a particular contract. Then 2 months it is idle. This idle time cost should not be charged to this particular contract. Okay, whatever time it has worked on or for whatever period it has been dedicated for the project, only that depreciation should be charged, right? So this is the theory part or conceptual part which we need understanding of. Then, most important, this from examination point of view, that is where most of the questions are tested in the examination, apart from the disclosure requirement. Okay. So, first is recognition of contract revenue. So, out of the total price, how much should I charge? How much should I charge, or how much should I record in the P&L? That is what we are discussing here. So for that, we need to check the final outcome of the contract. Final outcome of the contract means whether it will result in profit or loss. And if you can measure reliably, what is the final outcome of the contract, then you will recognize percentage completion method. Then, if you cannot measure reliably, I do not know the final outcome of the contract reliably, then revenue, very important, revenue should be recognized only to the extent of recovery of probable contract cost. Recovery is probable of contract costs which are incurred. What is the meaning of that? The meaning of this is, if I know the final outcome, I will use the percentage completion method. If I do not know the final outcome, then I will not recognize revenue more than cost. First thing. Second thing, whatever revenue I should recognize, there should be a possibility of recovery. Meaning to say, let us say in the same example, 1,000 is the contract price. Now outcome I don't know because I don't know the future cost that I will be incurring. So in that case, in the first year I incurred cost of 400. This was the cost incurred. Cost I will recognize fully. Entire 400 of cost I will recognize. How much should be the revenue? For the revenue, maximum is 400. In that also I should say, see whether I can recover this 400. If I feel that I can recover only 300, revenue should only be 300. If I feel I can recover 400, revenue should be 400. But it cannot be more than cost. It cannot be more than cost if the outcome cannot be reliably estimated. Then, if the final outcome of the contract is a loss, this is a favorite question in the examination. If the final outcome of a contract is a loss, if the final outcome in a contract is a loss, then in that case, the expected loss has to be accounted for immediately. If there are uncertainties due to which outcome of the contract would not be reliably estimated, but those uncertainties have ceased to exist now, revenue expense should be recognized by the percentage completion. Earlier, outcome was uncertain. We could not estimate the outcome. Now, we can estimate the outcome. So, start recognizing revenue and cost. Right? Now, what I'll do is, we'll take up a question. We'll come back to the theory subsequently. Because you need to work out the solutions in the examination. That is what is more important, right? Okay, so let's look at this question. PRZ and Sons are heavy engineering contractors specializing in construction of dams. Okay. From the records of the company, following data is available pertaining to the year ended 31st March. Using this data, applying the relevant accounting standard, you are required to compute the amount of profit or loss, arrive at the contract work in progress, determine the amount of revenue, work out the amount due to customers, due from customers, list down the relevant disclosures. So this we have not yet discussed, but as a part of this question itself, we will discuss it. Disclosures, we know we can do it subsequently. Contract price, this is agreed price. Work certified. Now, work certified, what happens is, of course, you would learn this as a part of costing also. When I say work certified, then what happens is, when I'm building or when I'm constructing something, let us say I've constructed a road or constructed a building, till the time it is fully constructed, it is in progress. It is in progress. Now, the other party, that is my customer or myself, I can appoint an engineer who will come and say that, okay, out of the work that you have said, this much of work is certified, means whatever I have incurred as, the cost, whatever I have incurred as the cost, they would say this much of work is completed. They will give a certificate. Work pending certification. This means I have incurred some expenditure, but the engineer or the authorized person or the responsible person has not certified the work. So when I say work certified, it basically means that whatever cost I have incurred, there is a third party which has come and said this much of work has been certified, this much of work is not yet certified, it will be certified in the subsequent period. Estimated further cost to completion. So this is incurred, and this is future cost. This is future cost. Stage wise payment received. This 1100 is payment by customer. This is payment received from the customer. Progress payments in pipeline. This 300 is billed but not received. This is billed but not received. Okay. So basically, when we say stage wise payments received, I have already received the money from the customer, and this is still in pipeline. I have not yet received. Now they have asked us to do many things. Okay, so some of them are related. For example, for profit and loss, I need to know the amount of revenue, and I will also need to know what is the cost and all incurred. So first, what we have to do is we have to see always what is the outcome of contract. First step in construction contract related question, what is the outcome of the contract? Outcome is determine whether it is profit or loss. How to determine? Cost incurred, that is 1250 plus 250, and estimated cost of completion 1750, right? So work certified and work pending certification 1250, 250. This is contract work in progress or actual cost incurred. Contract work in progress or actual cost incurred. Why it is in progress? Because till the time it is completed, it will be in progress only. Okay. Then estimated future cost 1750, which means I have already incurred 1500. I am expecting to incur another 1750. So what is the estimated total cost? This is the total cost of contract, estimated to be 3250. This is the first step. Then what is the revenue expected? 2400. Revenue is less than cost, means the outcome is a loss. The outcome is a loss. This 850 of loss have to be recorded in the first year itself. Okay, if it was profit, it's a different thing, but here compulsorily you have to record in the first year itself. 850 of loss. Now, how much of revenue to be recognized? Now, for recognizing revenue, we need percentage completion. which is equal to actual cost divided by estimated cost. What is the actual cost incurred? We have already calculated 1500. 1500. Then what is the estimated cost? 3250. So 1500 divided by 3250, we get 46.15%. This is the most important calculation you will do because remaining all steps will be dependent on this particular calculation. So percentage completion 46.15, percentage of revenue. Revenue is 2400. That is 46.15% of 2400, 1107.6 crores. So this is the revenue to be recognized. So far clear? Any questions so far? Okay. Now, one more thing I'll include here, which is not asked in the question. My revenue is equal to 1107.6 crores. And my cost for the year is how much? 1500. So the loss will be 1107.6 minus 1500. Loss is 392.4. But we have seen here that we need to calculate the loss of 850. There is an MCQ question also in the study material testing on the same concept, right? I need to calculate the loss, or my total loss should be 850. How much is my total loss here? Only 392. So I also need to provide for balance loss, that is 800 minus 392.4, that is equal to 800 minus 392.4, that is 407.6. This provision for balance loss, you should add it to the cost that you have incurred. So the total cost or expense, what you say, will be 1500 plus 407.6. So the total loss will become 800. Okay, so that is how you have to calculate the provision for the loss to be made or to be calculated. Okay, then the next thing which is frequently tested is amount payable or due from the customer. Amount payable or due from the customer. Now for this, you need to understand how it is calculated. Whenever I say amount is due from the customer, it is based on so here if you see, they have said we have received payments 1400, in pipeline it is 300. This is the amount receivable. Now we are saying how much amount is either due from the customer or how much amount we have to pay to the customer. Now think of it, in a normal scenario, this is, again, no need to remember the formula. In a normal scenario, amount from customer that I have to receive due, when I say, that is nothing but, what do I collect from the customer? Normally, I collect my revenue. Yes or no? I collect my revenue. This revenue, can I say it is cost plus profit or cost minus loss? That is what the customer has to pay me. So even in accounting standard 7, we have to see what is my cost plus profit minus any losses. This is what the customer has to pay me. In that, if any payments that I have received, this will be amount due or to the customer. Due from customer or due to customer. If I have to receive the money, it is due from customer. If I have received more, it is due to customer. Simple trick to remember, I will recover my revenue minus any payments received. I will recover my revenue. This revenue is as per books. Actual billing, progress billing, all of that may be different. We have to see as per books only. So in the given question, my cost is work certified plus work pending payment. This is 1500. So amount due is 1500. There is no profit, but there is a loss. How much is the loss we have recognized? Oh, I did here 800. None of you corrected me. This is not 800, but this is 850. So this number will also change automatically. So 1500 is my total cost minus loss of 850 minus how much have I received or is already in progress. Received 1100, in progress 300. So 1100 minus 300. So this will be 1500 minus 1400 minus 850, 750. Now if you see, this is what I am supposed to receive. 1500 minus 850. This is what I am supposed to receive. I have already received 1100 plus 300. So 1500 minus 850, that is what I am supposed to receive. I have received more, so this is payable. So what about this 300? This 300 is my account receivable, which will be shown separately, or you can net it off and then finally show the net amount in the balance sheet. Okay. Is this part clear? Clear how we calculated amount payable and amount due? Always take revenue, that is cost plus profit minus losses minus payments received and in pipeline. Any question in this? We'll do a couple of more questions because this is what is generally tested in the examination. Okay, generally this is what is tested in the examination. We'll take one more question from May 24 examination that will give you absolute confidence to handle this question in the examination. Yes, that 300 is still recognized as a receivable, as account receivable. We have already billed it. This is specifically from the point of view of contract payments due or to the customer. Let's look at this particular question. Uday Constructions undertake to construct a bridge for the government of Uttar Pradesh. The construction commenced during the financial year 16 and is likely to be completed by the next financial year. Contract is for a fixed price of 12 crores with an escalation clause. Cost to complete the whole contract are estimated to be 9.5 crores. You are given the following information. Cost incurred up to 31st March 4 crores. Cost estimated to complete the contract 6 crores. Now here, cost estimated was 9.5. We have already incurred 4 and now we have already also incurred additional 6. So this is what is relevant. This is not relevant. Okay. Escalation in cost by 5% and accordingly the contract price is increased by 5%. So there is a 5% increase in the contract price. You are required to identify the state of completion and calculate the revenue and profit to be recognized. Right. Now, how do we recognize this? Very simple. First, what is the cost incurred? Cost of construction already incurred is 4 crores. Estimated future cost is 6 crores. So the total cost is 10 crores. Total cost is 10 crores. What is the contract price? Initially we have agreed for 12 crores. Now we have to add it by 5%. So 12 crores plus 5% of 12 crores, that is 12 plus 0.6, that is 12.6 crores. So total contract price is 12.6 crores. Now what is the outcome? Outcome here is profit. Outcome here is profit. We can measure it reliably. Right. Now, what is the cost of completion? Completion till date is very simple. 4 crores incurred, 10 crores expected. Sir, but they have said here escalation is cost by 5%. That is already factored. See, it is not exactly the same number, but 9.5 versus 10, we have already factored in the increase so that you need not do it again. Okay, so the 40% is completion. Revenue is 40% of 12.6, 5.04 crores. Profit is 5.04 minus 4 crores, 1.04 crores. Simple question. Now we'll take one slightly, not a complicated question I would say, but if you are able to follow this question, from May 24 examination 7 marks. Construction contract is set. Okay, you will not have any trouble in solving that questions in the examination. Constructions Limited is engaged in the business of flyovers and rail over bridges. It obtained a contract from rail authorities to construct ROB for 400 crores. So this is not relevant for us. What is relevant for us is 400 crores, the contract revenue. The construction of the railway over bridge is expected to be completed in 4 years. Okay. Slightly lengthy question, by the way. At the outset of the contract, it was estimated that total cost to be incurred will be 370 crores, but by the end of first year, estimate stands revised to 375 crores. What should we take? We should take 375. During year 3, so year 1 is gone, year 2 is gone. During year 3, Construction Limited has requested for a variation in the contract, which is approved by the authorities, and accordingly, contract value will increase by 10 crores and cost will increase by 7 crores in the third year. So when they say increase, from the third year onwards, we'll make it effective. The Construction Limited decided to measure the stage of completion based on the proportion of contract cost to the total estimated cost. Contract cost at the end of each year is given below. Now, sir, this is for the year or what? Contract cost incurred at the end means this is cumulative. This is cumulative number. Okay. Year 1, 98.8 crores. Year 2, 202.4. Year 3, 310 crores, including unused material of 3 crores. If material is unused, we will not consider. Year 4, 382 crores. Calculate the stage of completion of contract for each year, profit to be recognized each year. Now here in this question, the thing that you need to do is contract completion. Once you are done with that, calculation of profit is not a big deal. Now first year when it comes to stage of completion, actual cost is 98.8 and at that point of time, our estimate was 375, not 370. See, 370 was initial. By the end of year 1, it is already 375. So we should take 375. So 98.8 divided by 375, 26.35. That is the completion. Second year, 202.4. 202.4 divided by 375, 53.97. Third year, 310 crores including unused material of 3 crores. So 310 minus 3, that is 307 divided by end of year 3. The total contract value will increase by 10, cost will increase by 7. So our estimate was 375 plus 7. So 307 divided by 375 plus 7. This is your number 80.37. And in the last year, fourth year, we have incurred how much? 382. Now don't do 382 divided by 300. It's already 382, 5 and 7. But even if this number does not match, fourth year completion will always be 100%. Fourth year completion will always be 100%. Okay. Now this, instead of doing like this, you can plot it in the same table as well. No problem. Okay. Then, how much revenue should be recognized? Revenue recognition should be based on the contract price. Contract price is 400. So, first year revenue 400 into percentage completion. Second year 400 into 53.97 minus 105. What is the meaning of this? I gave you the example earlier. This is cumulative. What is cumulative? Not the subtracted part. 400 into 26.35 cumulative revenue at the end of year 1. 400 into 53.97 cumulative revenue at the end of year 2. But we have already recognized 105 here. So we will subtract that 105. In the third year, our escalation has happened. So 410 into 80.37 minus whatever you have recognized in the first 2 years. And in the fourth year, 410 into 100% minus whatever you have recognized in the first 3 years. So if you want to make a simpler calculation, what you can do is, you can actually have cumulative revenue. First year 105.4. Second year 400 into 53.97. 400 into 53.97, you get 215.88. 215.88. 215.88 minus 105, you will get 110. So like that also you can do. Then contract cost incurred, directly you can pick it up from here. 98.8 for the first year. Now second year, don't take again 202.4. This is cumulative. 202 minus 98.8. 202 minus 98.8, 307 minus 108.8, 98.8 minus 103, and lastly 382 minus whatever has been recognized. This is 75. Profit is revenue minus cost. This is the profit to be recognized. How many marks? 7 marks question. Most likely it would have been 2 marks for calculating this, and maybe 5 marks for this particular paper. Okay. If you get a question like this in the examination, tell me who can stop you from scoring 7 out of 7. And that should be our mentality. If at all we get these type of questions, just grab that question and solve it. Even if it takes 2 minutes extra, 3 minutes extra, you are assured of the marks. Out of the 7 marks, 7 out of 7 means then we are left to score only 57 or 53 out of 93. Our task starts becoming much easier. Okay, so that is how we have to do. So what will the institute do is they will try to confuse you with this kind of heavy English. Only with good amount of practice you will be able to. So if you solve all the questions in this particular compiler, it is already available as a part of your dashboard. If you are able to solve this, life is set. Okay, only thing is English. Read the English very carefully. What is included, what is not included. If you are able to do that, there is no challenge at all. So let us look at this particular question. Grace Limited, a firm of contractors, provided the following information in respect of a contract for the year ended so and so. Fixed price contract with an escalation clause, 35,000. I think this is slightly setting error. Work certified 17,500. Work not certified 3815. Estimated future cost to complete 17,325. Progress payment received. So we'll take the actual question. Just give me a moment. Hope you are able to see me in the video now. So the power was not connected properly. Suddenly it shut down. Okay. Anyway, so in the meanwhile, what I've done is I pulled out this question, actual question, which is incorrectly done in the format. Okay. So this is in the old advanced accounting. I was searching in accounting paper. This question again. Now this question has been asked for 5 marks. If you look at the solution, it's pretty lengthy. Calculation of estimated cost, stage of completion, revenue, loss, provision for the loss to be made, all of those things. It is lengthy, but the thing is, you can score 5 out of 5. That is the whole objective. Okay. Even if I'm spending 2-3 minutes extra, and if I'm able to make 5 out of 5, it serves my purpose. And keep one thing in mind, after institute has introduced MCQs, they are setting theory, the descriptive part lengthy. This is what I've observed in the previous attempt. They have actually made it pretty lengthy. So be mindful that yes, questions will be lengthy. Accordingly, our speed has to increase. Okay. Now let's see the question. Similar, we have already done a similar question. Grace Limited, a firm of contractors, provided the following information. Fixed price contract with an escalation clause 35,000. Now, a lot of students have this doubt, so how to write in the answer? You can directly write 35,000, but ensure you convert the other numbers also in thousands. Work certified 17,500. Work not certified includes 2625 for materials issued, out of which material lying unused is 140. So what does this mean? Work not certified is 3815. Out of that 140, I have to ignore these 3 zeros. 140 means minus 140 will be my work not certified. Why? Because this material is still unused. So if material is unused, that becomes my inventory as per AS2. Okay, so I should not include it as a part of my work cost incurred. Estimated further cost to completion. So here also they have given ulta. Estimated cost of completion 17,325. Progress payments received 14,000. Payments to be received 4,900. All these terminologies you are already aware of. Escalation is caused by 8% and contract prices increased by 8%. Similar, right? Compute the contract revenue to be recognized. Calculate P&L for the year ended 31st March of 22 and additional provision for loss to be made, if any, for the year ended 31st March of 2022. First thing, fixed price 35,000. Now coming to the solution. Contract price 35,000 and they say there is an escalation by 8%. So 35,000 into 1.08, 37,800. This is the revenue. Cost already incurred 17,500. Not certified is also cost incurred. So 3815 minus 140. Why minus 140? Because that material I have not yet used. It is still lying at the side. So 3675, 21,175. Estimated future cost given in the question 17,325. Total cost 38,500. Contract price 37,800. Cost is more than revenue. So there is a loss. Outcome of the contract is a loss. So the total loss should be 8 minus 5, 3, 300. And 15 minus 8, 700 should be the loss. Okay. Stage of completion. How do we calculate stage of completion? Total cost incurred divided by estimated cost, right? So what is the total cost incurred? 21,175 divided by 38,500, 55%. So this is 1 mark for you. Okay. So you can directly say stage of completion is in exam is equal to work or cost incurred, work completed or cost incurred divided by total estimated cost. No need to write out the contract, percentage of completion till date to total estimate cost of construction. This also you can ignore so that you can save some time. Revenue to be recognized 55% of 37,800. So 37,800 into 55%, 2790. Again here also this you need not write. If you just calculate this, you will get the marks. Then loss to be recognized, that is cost incurred minus revenue 385 and additional provision for loss that you have to make. So here, this you have already, here itself we can calculate loss is 700. So no need to do this working again. This working you can skip. This 700, that working you can do here itself. So 700 is the expected loss minus 385 is the loss recognized, 315 you have to make additional provision. So you'll get 1 mark for this, 2, 3, 4 and 5. Simple, right? So that is how we should target and score wherever possible out marks in the examination. Any question in this particular question? Any question in this particular question? No questions? Okay. So see again, June 21 5 marks, similar question. Similar question. Okay, they'll add something. Labor expenses for worker engaged 16 lakhs out of 1 lakh is unpaid. Unpaid means what? It is an expense. You will recognize. Specific contract cost 5 lakh. Subcontract cost 5 lakh. Advance paid is not my expense, so that I should not consider. Right. So accordingly, you have to see advances should not be considered. Labor cost is already given to be 16. Outstanding does not make a difference. Okay. Then 21 lakhs out of which material 4 lakhs still lying unused. What I will do? 21 minus 4, 17 is what I will use. If material is unused, I will ignore. And institute is trying to play games with you by giving these things. Same again, percentage completed revenue. So here we'll do this one. At least one more round of practice will happen, and then we'll come back to theory. Okay. If you are able to handle these questions, trust me, you will score out in this particular questions in the examination. There cannot be any more complexity. Rajendra undertook a contract of 20 lakhs on an arrangement that 80% of the value of work done as certified by the architect of the contractee should be paid immediately and that remaining 20% be retained until the contract was completed. Now this is basically talking about retention. Just understand, if you have given me a contract and I have said I will charge 1000 from you, if I complete 500 of cost or work, you will not give me 500. You will keep something as a retention because the work should be completed. What if there is some damage subsequently? So generally what happens, typically 10% or 20% of the amount which is billed, that is retained as a retention money which will be released subsequently. Okay. In year 1, the amounts expended means spent, English, were 8,60,000 and the work was certified for 8 lakhs and 80% of this was paid as agreed. It was estimated that further expenditure to complete the contract would be 10 lakhs. So, how much is incurred? 8,60,000 is already incurred. This does not make any difference to me because I already have the number of 8,60,000. I am repeating once again. This 8 lakhs is of no relevance to me. I should not consider this. This I will consider because that is the amount which has already been incurred. That is already there. Then it was estimated that future expenditure would be 10 lakh. So what is the total estimated cost? 860 plus 10 lakh, 18,60,000. So done, 1 mark in your pocket. Okay. It was estimated that, in year 2, the amount spent were 475. 3/4 of the work under the contract was certified as done by December 31st and 80% was received accordingly. So, how much did we spend? 475 in the second year. It was estimated that future expenditure to complete the contract would be 4 lakhs. Now, this is for the second year. This is for the first year. In year 3, amount spent were 310 and on 30th June, the whole contract was completed. Show how contract revenue should be recognized in the P&L each year. Now, is it asking me cost? No. What is it asking me? Only revenue. How should I recognize the revenue? Every year in the financial statement. Now, first year is very simple. Actual expenditure 860, future expenditure 10 lakhs, total expenditure 18,60,000. So, how much revenue should be recognized? Percentage completion 46.24%. That is 860 by 1860, 46.24%. So, revenue, I don't know why we missed it here. Revenue in year 1 is equal to 46.24% of 20 lakhs. 20 lakhs. Okay. So 46.24 of 20 lakhs means 46 into 2 is 92. 924800. 924800. This is in year 1. Now in year 2 what has happened is, in year 2 we have incurred expenditure of 475. That is the expenditure for year 2. Future expenditure we are expecting 4 lakhs and we have already incurred 860 here. So this 860 will also come in the cumulative expenditure. Now this is one standard where you have to be comfortable in handling cumulative numbers. Okay. So the cumulative numbers are 475, 4 and 860. Total became 17,35,000. 17,35,000. This is the total expenditure. How much have we incurred so far? 475 and 860. So 475 plus 860, 76.95%. How much revenue should be recognized? Cumulative is 20 lakhs into 76.95 minus 924. It gives us year 2 6 lakhs 14,000. So total percentage multiplied by total revenue will give me cumulative revenue. This cumulative revenue minus whatever I have recognized should be the revenue in year 2. Now when we go to year 3, till year 2 we have already recognized 15,39,000. So balance should be recognized in year 3. So in the third year it will be directly 20 lakhs minus 1539, 461. Okay. We don't need to calculate percentage because in year 3 it is anyways 100% complete. Okay. Nothing has been asked about how much should be the cost, but if they ask, you will be able to compute from this directly. Again, similar question, May 18, 5 marks. Okay. Right? So we have handled the type of questions working that will be tested in the examination. Now coming back, a quick recap of the theory portions. Now, We spoke about outcome of the contract. For question solving purpose, you will just take what is the profit or loss, whether you can determine it properly or not. But there are some conditions we need to check. For a fixed price contract, the outcome, final outcome, can be measured reliably or estimated reliably if the total contract revenue can be measured reliably. This is given in the question. It is probable that the economic benefits associated with the contract will flow to the enterprise. Basically, I will receive the money from the customer. Both the contract cost to complete and the stage of contract completion can be measured reliably, and the contract cost attributable to the contract can be clearly identified and measured reliably so that actual contract cost can be compared with the prior estimate. So basically what you have to say is, I should be able to measure the revenue reliably, I should get future economic benefit, and the contract cost as well as the stage of contract or the future contract cost should be estimated reliably. For a cost plus contract, it is probable that the economic benefit associated with the contract will flow to the enterprise, and the contract cost attributable to the contract can be clearly identified and measured reliably. So contract cost you will be able to measure reliably, and economic benefits will flow to the enterprise. Of course, revenue you should be able to measure reliably. If you cannot measure the revenue reliably, you will recognize only to the extent of cost incurred. Percentage completion you have already seen, total contract cost divided by total expected cost, revenue, contract price into percentage of cost completed. Expected loss on contract is recognized as an expense immediately. Okay, this is the first step in your calculation, so that finally when you get to the loss for the year, let us say it is 200 and expected loss is 300. 200 minus 300, this 100 should be provision for loss. The amount of such loss is determined and recognized irrespective of whether or not work has commenced, stage of completion, amount of profit expected on other contract. Meaning to say, once you have estimated that there will be a loss, recognize the loss. Don't worry about what will be the future profit or I'll make profit in the future. No. Today, if it is an estimated loss, it is recognized immediately and fully. Okay, this is done. Yeah. Uncollectible contract revenue. When an uncertainty arises about the collectibility of an amount already included in revenue and recognized in P&L, then the uncollectible amount is recognized as an expense. Subsequently, this is basically your bad debt expense or your provision for bad debt. Then when it comes to stages of completion, you can use, most likely this is the question that is tested, proportion of contract work cost incurred till date to the estimated cost, or you can carry out survey of work performed. This is more like an output, or completion of physical proportion of contract work. This is also output. If at all they do not give you this information, and if they give you this information based on output, you can calculate. Then the next part is more on theory side. They may give you a case study and ask you whether you should combine multiple contracts into a single contract or whether you should segregate the contract. Now it becomes important because if there are two different contracts which are highly dependent on one another, for example, I take up a contract for construction of a building. In that contract for construction of a building, I am also required to give club facilities. I am also required to construct club facilities. Now what happens is, I know on the building side I will incur or I'll make profit. On the club and amenities side I will incur losses. Okay. To manage, what I do is, to manage my revenue, to manage my P&L, I enter into two separate contracts. So basically what I do, building separate, club separate. Building there will be profit, club there will be losses. Okay, I know that. So I enter into two separate contract. I manage the timing such that I can manage my taxes. Okay, but what the standard says is, if these two are related, don't segregate them. Combine them into a single contract and recognize accordingly. Meaning to say, take this profit, take this loss, treat the entire bunch as a single contract. So we have to see whether we should combine or segment. Combine means two different contracts and we can make together, or segment. single contract divide into different contracts. Okay, so that is where we have to check the condition. Okay, now if a contract covers several assets, the construction of each asset should be treated as a separate construction contract. When should we treat it separate? When separate proposals are submitted for each asset is separately negotiated, and the contractor and customer can accept or reject part of the contract relating to each asset, and the cost and revenue of each asset can be identified. Now, this could be a case, for example, I have to construct buildings at 3 locations. I have entered into a contract with you, 3 locations. Let us say Hyderabad, Chennai, and Bangalore. I negotiated Hyderabad separately with you. I negotiate Chennai project separately with you. Bangalore project also I have negotiated separately. But to save cost on legal registration fees, stamp duty, and all of that, what I do is I enter into a single contract. I don't enter into 3 different contracts. But tell me, Hyderabad, Chennai, and Bangalore, did I submit separate proposals? Yes. You could have said, sir, I accept Hyderabad proposal from you, I reject Bangalore and Chennai. Yes, that is also possible. So, if separate proposal has been sent, if separately negotiated, and you can accept or reject each part of it separately, and cost and revenue can be separately identified, the substance is that these are separate 3 contracts. Legal form, it is a single contract, but because I have negotiated separately, I have handled everything separately, these are separate contracts for the purpose of accounting. So what I will do, I will create 3 separate contract accounts in my books. That is the meaning of separation or segmenting of contracts. Then a group of contracts, whether with a single customer or with several customers, should be treated as a single contract when group of contracts is negotiated as a single package. Contracts are closely interrelated, that they are in effect part of single project. Contracts are performed simultaneously or in a continuous sequence. Now this happens in a case, for example, I have taken a building contract. First floor is for the holding company. Second floor is for the subsidiary company. So subsidiary company will occupy the second floor, holding company will occupy the first floor. Accordingly, we have negotiated the contract. But everything was done together. Negotiation of prices was done together. Then the prices were agreed together. The price of one contract, holding price, has impacted the price of the subsidiary. Maybe from holding I am charging 120, but from subsidiary I am charging only 80 for their management purpose. What the standard says is, because you have a group of contract which is negotiated as a package and they are closely interrelated, basically that's a continuation. Unless I complete the ground floor, I will not be able to complete the first floor. So it is a continuation of the contract, and they are performed simultaneously, and they are interrelated and a part of single project with a single margin. So this, they say, you combine or treat it as a single contract. Okay, so basically what you are saying, look at the substance of the contract, not the legal form of the contract. If the substance of the contract says that this has to be combined, you should combine. If the substance of the contract says that it has to be segregated, you will segregate or segment. See, this is more from accounting point of view. Then, if there is an additional asset under a contract, it should be treated as a separate contract when the asset differs significantly in design, technology, or function, and the price is separately negotiated. So, let us say you gave me a contract to build a particular, building. I was executing that, then you came up and said, sir, I like your work. So let us have another place. There is one more building which you need to construct at a different location. In that case, most likely the additional asset, though it is included under the original contract, it is a separate contract. But if I have entered for construction of 3 floors, you come up and say, sir, let's also build the 4th floor. Then in that case, it is a part of the existing contract. So looking at the facts and circumstances of each case, you have to decide whether it is separate or not. Okay. So if you see some questions. AP Limited, a construction contractor, undertakes construction of a commercial complex for K Limited. AP Limited submitted separate proposals for 3 units of the commercial complex. Single complex, 3 proposals. A single agreement is entered into between the two parties. The agreement lays down the value of each of the 3 units, that is 50, 60 and 75. Agreement also lays down the completion time for each unit. Comment whether AP should treat it as a single contract or 3 separate contracts. Okay. Now, when should we treat it as a single contract? When separate proposals have been submitted. When should we segregate? When separate proposals have been submitted, each asset has been a part of separate negotiation. Cost and revenue of each can be measured separately. So here, if you see, they have given separate proposals for 3 units. Proposal has been given separately, means negotiation also has happened separately. So you have to give these 3 conditions and say you need to treat construction of each unit as a separate construction contract. Okay. This again is a theory question. Look at this. GTI Limited negotiates with Bharat Oil Corporation Limited for construction of retail petrol and diesel outlet stations based on proposals submitted to different regional offices of BOCL. The final approval for one outlet each in region X, Y and Z is awarded to GTI. Single agreement is entered into between two. The agreement lays down values for each of the 3 outlets. Agreement also lays down completion time for each region. Comment whether they should treat it as a single contract or separate contract. Now again, when should we treat it as separate? When we have given separate proposals. Did we give separate proposals? Yes. To each of the regions we have given separate proposals. So then we have given separately, negotiated separately, approval is given separately. So they have to be applied separately. They have to be considered as separate contracts. Right? Then sometimes what happens is in the examination they also ask you questions on disclosures. Okay, some standards where I have specified that go through disclosures thoroughly, like in case of, let's say, accounting standard 19, disclosures are very important. Accounting standard 7, disclosures are important. Please revise the disclosures as well. So what do we disclose? Contract revenue, amount recognized, what is the method used, and what is the method used to determine stage of completion. Then disclose cost incurred and profit recognized, advance received and retentions. Then this is very important. They have asked multiple times amount due from or due to. So how to do it? How to do it basically is, as I told you, cost incurred plus profit minus losses minus amount received, and if at all there are any billings which have been done. Billings means I have already billed you and it is in pipeline. So cost incurred plus profit minus losses minus progress billings, you have to calculate. If the amount is positive, due. If the amount is negative, you have to pay to the customer. Due from customer is an asset. Due to customer is a liability. Okay. So that is it from this particular standard, accounting standard 7, a highly scoring standard. I want you to go back and go through all the questions that has been given as a part of the compilation. Okay. Any questions? If no questions, then we'll take a 5-minute break and we'll start with accounting standard 7. Second, in the ICA material, question similar. See, ICA study material, no? So they jump things. They have skipped the first table. We can't do that in exam. Okay, so second question. What is the second question? Are you referring to this one, May 22? What we did? So how can you skip? See, one thing is you write in. Okay, so there are 2 ways to solve the questions. I will see. I'll pull out the study material actually, so that we can clarify this doubt immediately. You don't need to worry. So study material is not the benchmark for writing answers in the examination. Please keep that in mind. There are some errors. Some things have not been properly given, so we should not do that. So also the way they have given is you should give 9 first. You should learn 9 first and 7 subsequently. Illustration number 6. Okay, same thing what they have done. So see what they have done is here we have taken work certified, work not certified, 21 months 75, that they have calculated here 605. Okay, then 1100 they have done working like this. So here they have done 500 plus 105 plus 495. If you want, you can do that way also. But what happens is for the examiner to give you marks, he's searching for these numbers. So it is easier if you do. See, the problem here is here anyways you have done 500 plus 105, 605. Add 495 here itself. No, that is more easier. So what you do is take this 495, add it here and bring it to 1100. They have split the table, which is not drawn in a logical way. Finally, what the examiner is looking from your answer is, did you calculate 605? Did you calculate 1100? Then did you calculate this 100? Did you calculate percentage? Now see, percentage they have said this is 55%. Like, don't do that. Say percentage completion is 605 divided by 1100. So it is 55%. Examiner is looking for this 55%. Then examiner is looking for this 550 and looking for this particular amount of 35. So do it in the manner, suggested answers are slightly better because they have some inputs from the examiners also. So do it in that manner. This is a clumsy way of doing the answers in the examination. Okay.